Hello everybody! This video is presented to you by Year 5. We are going to present the qualitative characteristics of useful information as well as an example of a cloud-based accounting system. So just keep on watching to better understand the topic.
Fundamental characteristic. First, I would like to share about what is relevance. Relevance. In accounting, the term relevance means it will make a difference to a decision maker. Relevant information is capable for making a difference in the decision made by users. It is capable making a difference decision if it has predicted value, confirmatory value, or both. Predictive value help users in predicting or anticipating future outcomes. Confirmatory value enable users to check and confirm earlier predictions or evaluation. For example, in the decision to replace an equipment that has been used for the past 6 years, the original cost of the equipment does not have relevance. In other words, the original cost is irrelevant or is not relevant in the decision to replace the equipment. What will have relevance are the future amounts, such as the cost of the new equipment and the savings that will occur when the old equipment is replaced. Here's another expression of relevance. Costs that will differ among alternatives. Costs that will not differ among alternatives do not have relevance. In order to have relevance, accounting informations must be timely. Financial statement issues 3 weeks after the accounting period ends will have more relevance than financial statement issued several months after the period ends. Having timeliness and relevance may mean sacrificing some perceptions or reliability. The relevance of information is affected by its nature and its materiality. Materiality, information is material or omitting it. Misstating it could be influence decision. Then that users make on the basis of the financial information about a specific reporting entity. Materiality is an aspect of relevance which is entity specific. It means that what is material to one entity may not be material to another. It is relative. Information is material if it is significant enough to influence the decision of users. Materiality is affected by the nature of magnitude or size of the item.
Good day and flying peace. I'm Beth Rachel May Emiliora, and I will discuss one of the two fundamental qualitative characteristics, which is faithful representation. Qualitative characteristics are the qualities or attributes that make financial accounting information useful to the users. Fundamental qualitative characteristics are relevance and faithful representation. Now I will be focusing on the faithful representation and its three characteristics, namely completeness, neutrality, and free from error. Faithful representation means that financial reports represent economic phenomena or transactions in words and in numbers, or that the descriptions and figures must match what really existed or happened. In simple words, information accurately depicts what really happened. For example, if a business makes a total sales of 4 million, it should report that amount in its financial statements, no more, no less. The first characteristic of faithful representation is completeness. Completeness requires that relevant information should be presented in a way that facilitates understanding and avoids erroneous implication. This simply means not omitting material information. This may answer these questions. Did we include everything in the financial statement to give our investor a good picture of what's going on in our organization? Or did we leave expenses off the books so that it makes our net income look higher and investors are very excited? but that doesn't actually paint the actual picture. If the financial statement omits material information, then the financial statements can be misleading or incorrect. The second characteristic is neutrality. A neutral depiction is without bias in the preparation and presentation of financial information. So let's say, for example, there is a public company and there's an executive that owns the company stock. Well, if the executive is working with the accounting department and influencing them in a way that he is trying to make them inflate the earnings and decrease the expenses in an artificial way, well, that would be biasing the accounting information and would violate the faithful representation of information. The third characteristic is free from error. Free from error means that the information is not materially misstated. This doesn't mean, however, that the accounting information must be perfectly accurate in all respects, because some accounting information necessarily needs to be estimated. But the methodology of how we arrive at the estimates has to be disclosed. Free from error means that there are no errors in the description and in the process by which the information is selected and applied.
Financial information has several qualities that make it useful. The demand for accounting information by investors, lenders, creditors, and others creates qualitative characteristics that are desirable in accounting information. There are 6 characteristics of accounting information. 2 of the characteristics are fundamental, while the remaining 4 for qualitative characteristics are considered enhancing. Now, we are going to tackle about the enhancing qualitative characteristics. The enhancing qualitative characteristics are divided into 4 attributes: comparability, verifiability, timeliness, and understandability. Comparability is a degree to which accounting standards and policies are consistently applied from one period to another. Financial statements that are comparable with consistent accounting standards and policies applied throughout each accounting period enable users to draw insightful conclusions about the trends and performance of the company over time. Comparable information enables comparisons with the entity and across entities. When comparisons are made within the entity, information is compared from one accounting period to another. For example, income is compared for the years 2017, 2018, and 2019. Comparability of information across entities enables analysis of similarities and differences between different companies. A company's accounting results are verifiable when they are reproducible, so that, given the same data and assumptions, an independent accountant can produce the same result the company did. Verifiability helps to assure users that information represents faithfully what it purports to present. Financial information is supported by evidence, and independent individuals can check them to see whether such information is faithfully represented. In other words, information is verifiable if it can be audited. Verifiability has its own limitations too. First, verifiability doesn't have to do with determining the truthfulness of the data a company provides, but rather with making sure
its results logically flow from the data. Second, verifiability also doesn't pass judgment on whether the assumptions made are correct or even appropriate, just whether the results matches the assumptions. And third, finally, verifiability is silent on the interpretation of accounting results. Timeliness means providing information to decision makers in time to be capable of influencing their decisions. It shouldn't be significantly delayed, or else it will be of a little or no value. The timeliness of accounting information refers to the provision of information to users quickly enough for them to take action. Timeliness is how quickly information is available to users of accounting information. The less timely, the less useful information is for decision making. Timeliness matters for accounting information because it competes with other information. For example, if a company issues the financial statement a year after its accounting period, users of financial statements would find it difficult to determine how well the company is doing in the present. Classifying, characterizing, presenting information clearly and concisely make it understandable. A principle which states that a company's financial information should be presented in such a way that a person with a reasonable knowledge of business and finance and the willingness to study the information should be able to comprehend it. The principle is included in the Accounting Standards Board Statement of Principles. Understandability requires financial information to be understandable or comprehensible to users. To be understandable, information should be presented clearly and concisely. However, it is improper to exclude complex items just to make the reports simple and understandable.
Hi, this is Mitch Minglana. My part is to discuss the cloud-based accounting system that our group has chosen. So here we will understand how this particular cloud-based accounting system works and how it helps the businesses is in their financial recordings. So let's begin. The cloud-based system that we choose is what we call the QuickBooks Online. The picture shown in your screen is the logo of the QuickBooks Online. So what is this system all about? Let's find out. QuickBooks Online, or QBO, is Intuit's cloud-based accounting product. QBO was launched in 2004, and while the software was initially far less developed than the reigning QuickBooks Desktop, Intuit has made serious strides with this product and is constantly adding new features and small business services to improve their software. QuickBooks Online is designed specifically for small businesses. However, the new QuickBooks Online Advanced Plan makes the software scalable for larger businesses as well. The software offers a robust feature set, strong accounting, online payroll, attractive invoices, 650 plus integrations, and a unique lending features. QuickBooks Online is also significantly easier to learn and use. Since the software is cloud-based, QBO works anywhere you have an internet connection, and there are mobile apps to help you manage your business on the go. QuickBooks Online offers a detailed chart of accounts, journal entries, bank reconciliation, accounts payable, accounts receivable, and the basic reports needed to run a company. QuickBooks Online now offers a bookkeeping service called QuickBooks Live Bookkeeping, where you can pay for professional support from certified QBO accountants and CPAs. For a small business owner new to the accounting scene, this new service may be much needed peace of mind when it comes to managing your books and filing small business taxes. When it comes to invoicing, QuickBooks Online makes it easy to create beautiful customer invoices. The designs are clean and modern, making it easy for customers to understand their invoices. Here is an example of what a QBO invoices looks like as shown in your screen. In addition to having a better invoice templates design, QuickBooks Online also has better automation such as recurring invoices, batch invoicing, and progress invoicing, sending invoice reminder to late paying customers, the ability to auto-schedule invoices, and a client portal where customer can make online payment. Since QBO is a cloud-based accounting system, you can download it with its iOS and Android apps. So why we choose QuickBooks Online as our example to a cloud-based accounting system? Here are the 4 reasons. First, QuickBooks Online is cloud-based and can be accessed anywhere at any time. Second, QuickBooks Online has more automations. Third, QuickBooks Online is easier to learn and use. And the last is QuickBooks Online has monthly subscription pricing. Another reason why we choose QuickBooks Online is that it is well known globally. If you look at their page, it has over 4.2 over 5 of customers rating reviews. And there are 7 million customers who are using QuickBooks Online globally.
So why your business should be using QuickBooks Online? QuickBooks Online is a solution to you and to your accounting needs. By this QuickBooks Online, you can now access your finances anywhere as long as you have your internet access. And here are the benefits or the features that you can get when you are using QuickBooks Online. First, faster system. QuickBooks Online allows multiple users to log into the financial records for updates, research, and financial analysis without experiencing common slowdowns of in-house computers. Second, accessibility. Small businesses owners may review real-time results from analysis anywhere, whether to their desktops, laptops, or phones. Third, no more upgrades. Ensure handles upgrades in the background, ensuring availability of the most current features and functions. And last, free secure storage. Financial data is protected and routinely backed up on remote servers.
About the qualitative characteristics which are present in the QuickBooks Online.
So there are many qualitative characteristics which are present in QuickBooks Online. First is QuickBooks Online has confirmatory value in which it can provide information about past events. For as long as you subscribe to the application, it can store data securely. Otherwise, if you only acquire free trial or if you cancel your subscription, you can no longer visit the application and you cannot use your data. QuickBooks Online is therefore a very helpful tool for your business because it can store helpful information for past events. Confirmatory value is helpful especially when a company is experiencing a strong quarter and presenting their improved results to creditors is relevant to the creditor's decision making to extend or enlarge credit availability to the company. Second characteristics present in the QuickBooks Online is that it is neutral, which are free from bias. Third is QuickBooks Online has verifiability, where it has the extent of information to reproducible given the same data and assumptions. For example, if your company or business owns equipment worth $20,000 and told an accountant the purchase cost, depreciation method, and useful life, the accountant or the person in charge for this should be able to reproduce the same result. Otherwise, if they cannot, the information is considered not verifiable. Fourth is QuickBooks Online has timeliness, where the information is readily available to the users anytime. Since this is a cloud-based accounting system where you can open even if you are not in the office or perhaps you are in the meeting with your clients or investors, you can confidently present the financial information to your potential investors because the data you store in QuickBooks Online is timely, meaning the information is quickly and readily available to the users. Fifth characteristics is that it has understandability, in which the information is easily understand. The picture shown on your screen is an example of QuickBooks Online when you go to the dashboard. In dashboard, it can automatically display your profit and loss, how much is your expenses, your bank accounts and invoices. So see, QuickBooks Online is easy to use and convenient. Last characteristics is that it has comparability. The technology will function the same over time not unless it is broken or malfunction. It has comparability to which the degree to which accounting standards and policies are consistently applied from one period to another. Financial statements that are comparable with consistent accounting standards and policies applied throughout each accounting period enable users to draw insightful conclusions about the trends and performance of the company over time. In addition, comparability also refers to the ability to easily compare a company's financial statements with those of other companies. So those are the qualitative characteristics which are present in the QuickBooks Online. Again, this is Group 5. Thank you and God bless.